Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Sunday, September 29th, 2024. I hope you guys are having a fantastic weekend, and let's get started. So, we saw the bulls try to gap up on Friday. So they gapped to new highs in the on the actual, when we got up here with the report that we did. I had said that, there's a really good chance that they're going to come back down and close this gap. And that's pretty much what did it. And the thing is, when that happens, when the gap ups and then we close the gap the same day, it just means that the bulls are tired, because they should have kept running on this. But I've been showing you this 5750 call wall. So you can see each time we went above it, it was just pushed right back down again, because there's, I want to say, somewhere in the range of 40,000 contracts that JP Morgan owns that are short to calls at 5750. So they have a lot of buying power or selling power to be able to kind of move things around. So it really does look like we're just really consolidating up here. Like, this is the top of the zone, this is the bottom. And until really, the important thing is going to be the 5,700 level. If the bulls can get it, if the bears can get it below that, that's when we start looking at could be 5,650 in that range there. But until the bears get through any kind of resistance, these dips are going to be bid back up again. It does not make things any safer. So here's the 15-minute chart. You can see we have bearish divergences. If we go to an hourly chart, I was really thinking that that Thursday's massive gap up was going to remove these sell signals, but as you can see, they're still here. So again, we're staying higher, but the problem is that the bulls look like they're out of energy right now. So expecting some backing and filling, or even more than that, if we end up heading higher, then I don't believe it's going to be very similar to what we saw on Friday, where we have the gap up and then they're selling all day. It's just we need a break. That's probably the best way to put it. And seeing the move that coming from, I would say really where I would anticipate price to go when we do make the top, because I can't say we're here yet, but this is what I'm talking about, where we are in a wave 5 of 5. So if it's going to match this, so here you just say 1, 2, and then this is the same size right here. That's bringing us to 58.50. So that might be where the top is. But my point, what I've been trying to make, was from where we are right now, there's more points to the downside than there is on the upside. That's it. I'm not looking for a massive bear market. Something like that may happen, but it's above my pay grade. I'm not really looking into that. I'm looking for your 10%, maybe even 15% pullback, and it could start anywhere up here. I think the uncertainty of the elections that are coming up, that's going to put some volatility into this market. So we're going to break out of this range, and when we do, it's just the thing. The problem for the bulls are that there's just sell signals on every chart right now. So I would be careful. I think I put in one of the morning notes where I said, starting to build your short position from anywhere from 5750 up to 5800 is a good. I think it's a high probability trade, and I still believe that, because once this does make its top here, we should, at a bare minimum, see a move come back down somewhere into the 5,400. Being this is a wave 5 of 5, it has it has a chance of even retracing more than that, meaning that we come somewhere down into this support level. And the only reason is it's just where we are as far as the wave structure, and and as many people know that have been following me for a while, is you do not want to jump on the trend train when you're in a wave 5 of 5, because you don't know when they're going to end, and when they do, there's usually a majority that are caught on the wrong side, and we see the moves downside exaggerated. So again, we're really, what I'm looking for is some kind of retracement. I think there's more points to the downside than there is the upside from these particular levels. But maybe we need to get up to the 5,800. This will be probably, I'm pretty sure, unless J.P. Morgan has unwound that large position at the 47.50, it's probably we're gonna see the same exact type of tape. We're gonna come up, maybe make a new high, but then end up coming back down. And if they did take it away and they're not short the calls, then we can, we can head higher, but we'll know pretty much on one day what's going on, because if we get the spike up or something at the open, and then we sell off, it means that they're still in that position and they're not going to let it run higher. So until I would say the bears can get priced through this 5,700, the bulls are going to continue to buy the dips. Once we break through that, that's where we start looking at lower levels. But right now, we have the sell signals, but there's no real sellers out there. So you got to just assume that the dips are going to get bid back up. And once that changes, then you could switch to the short side. But I still like doing the short, building a short position anywhere from 47.50 up to 4,800. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.